everyone, and happy Wednesday to you. I hope you're having a great week and certainly a great day today. We had a very busy morning earlier today, as we had our weekly tweet chat. Great topic. If you didn't get a chance to review it, I want to definitely encourage you to jump on Twitter, do a quick search for hashtag Winnie Sun, or you can check out my profile and see all the conversation. Well, let's talk about the financial markets because a lot of stuff continues to go on. In fact, today was one of those days where you're scratching your head and you're looking like, what just happened? And I know this is the case because I've talked to a lot of financial professionals and they continue to be just bewildered and really surprised in many ways as the market continues to roar ahead. The Dow closed up 454 points. The NASDAQ closed up 116 points. It's been the best day for many of the indices since mid-July. In fact, Coca-Cola did very well, say IBM as well. A lot of positivity all around the financial markets. S&P and NASDAQ actually reached new record highs again. So many of you who've heard me talking about the financial markets every day that the markets is open, have been really witnessing what's going on today and continues to do in terms of the financial markets, really surprising us because certainly not reflecting everything that's going on with the economy, with the pandemic, and everything in between. And many of you are probably surprised and thinking, wow, I did take some profit earlier this year or earlier during this pandemic, and wow, maybe I should have waited. And I want to encourage you to remember that it is always okay to take profit a little bit sooner than you anticipated, because things could have changed very much differently, considering that we're still in the pandemic, considering doctors and physicians and scientists continue to remind us that there still is a lot of work to do before we're behind this. And certainly with over 40 million Americans continue to be at the brink of being evicted and even more Americans unemployed, there's a lot of work to be done. And I will say, although the stock market looks pretty good right now, being cautious is never a bad thing. And certainly this is a great reminder of that as we see more changes and things happening, right? Things happening. And so today is a big day. I definitely wanted to go over your questions because I know we had a lot of them come in, but I want to share with you a study that my friends at CNBC just conducted. I want to bring this to your attention because it's a big one. So CNBC recently did a report with their friends at Acorn, a whole study pertaining to the pandemic and the financial survey of people like yourselves, like myself, and how we felt about the pandemic, what our savings patterns are, what are sort of our financial mindset, and it's all here. So CNBC is starting to release more of the survey, a lot of information in there, and I've had the honor of contributing some of my thoughts to some of their study and the results as well. So if you haven't had a chance to do so yet, I definitely want to bring this to your attention. We're sharing this on a screen with you, this study. And it's really interesting. It takes a look at how people are saving right now, how people are spending right now, as well as their feelings towards the financial markets and the housing and everything in between. And a lot of stuff. I think you're going to find it very interesting. So definitely stay close because I believe they're sharing bits and pieces of the survey results over the next few weeks. I think you're going to find this information helpful, not only to prepare for yourself and your family financial wise, but also to give you a gauge of how others in America are doing. So definitely want to bring that to your attention. All right. Now this is what you're coming here for. I know Wednesdays are always a big day because Wednesdays are FAQ days where we answer your questions. So let's see some of your questions. Go ahead and share something with us right now. All right, question. Let's see what this says. It says, yesterday evening, the White House announced that it will halt evictions as fear of coronavirus-fueled housing crisis grow. What does that mean for me if I'm worried about how I'm going to pay rent? Okay, so big news. Now, you may have seen, if you haven't already, I actually posted an article yesterday on Forbes on this topic. So when you have a chance, definitely check out Google Forbes, Winnie Sun, Evictions. I actually just shared my tips. If you're actually concerned that you might be at risk of an eviction soon, those are some tips that I want to share with you. Lots of good information on what you can do. But what this says is the CDC announced late yesterday that Americans who are currently at risk of eviction don't need to be concerned as of right now. For the next 4 months or so, or actually, until the end of the year, you cannot be evicted from your property, even if you're not able to come up and pay for rent. And the reason is because the CDC says for health reasons, they need you to stay put. So they can't risk having a bunch of Americans, actually almost 40 million, who are at risk of being evicted on the street, because it is safe and it's for everyone's health benefits that you stay in place. Now, that doesn't mean you shouldn't pay rent. So that's why I want to definitely reference this. Just because you can't evict it doesn't mean you should stop paying rent. So if you have the ability to continue to pay rent, you absolutely must continue to pay rent. Because come January 1st, when this CDC eviction protection goes away, all that rent's going to be due. So this doesn't prohibit landlords from evicting you come January 1st. So as much as you can, continue to pay rent. If you're having challenges paying rent, definitely start having conversations with your landlord. Check out the article I shared on Forbes. That's gotten a lot of good tips and information, legal assistance, as well as where you can go to for help too. And actually, I would recommend, since you sort of have like sort of a little buffer now between now and the end of the year, definitely take a moment, review the article, look at your resources, start making connections with some of those resources, as well as legal aid, contacting elected officials in your neighborhood to find out what you need to do come January 1st if you still aren't able to make your rent, or you need a sort of a deduction on your rent. You got to do your homework sooner rather than later. But great question. That's what that means for you. Let's see. Next question. What do we have? Okay, heard the payroll tax deferral just started this month. What do I need to do about this for our employees? All right, big news. In fact, this is big news. President Trump and White House has announced that we are getting a payroll tax holiday for those of you who are employees, W-2 employees, and in fact that earn less than $4,000 on a biweekly basis. You actually have the option for a payroll tax holiday. Now, there are some contingencies to this. Now, understand, number one, your employer must have the ability to be able to pull out and give you back your payroll tax that is normally withheld. And you might say, well, how much is that? Typically, your payroll tax amounts to 6.2% of your income. Now, usually that payroll tax is split between you and your employer. So your employer will pay 6.2%. And you pay the remaining 6.2%. Now, that's one of the big differences. If you're a W-2 employee, then you usually pay payroll taxes or have them withheld. But if you're a 1099 employee, typically that's not the case because you're self-employed at that point. But however, that being said, here are some things that I really want you to understand. I had a deep conversation with my accountant and business CPA earlier today on this exact topic so that we could really give you flesh this out. I just want to make sure my information to you is correct. Now, understand the payroll tax, you should really just sort of AKA it as Social Security tax, because that which you pay into payroll tax goes to fund the Social Security program for all Americans so that when you get older and you need Social Security, that money is there for you. However, that being said, here's the thing. Your employer may or may not be able to give you a payroll tax holiday depending on who handles their payroll tax pull-out system and all that. The other thing I would want you to know too is just because we're getting a holiday doesn't mean you're not going to have to pay these payroll taxes in the future. So, this is only, again, until January 1st. And then at January 1st through April, you're going to have to make up that payroll tax. So actually what I'm going to be telling my employees is I actually recommend they not take the payroll tax holiday. And if they can, to go ahead, since I know I'm still paying my employees, to continue to have that money pulled aside for payroll taxes now and just pretend that there is no such thing as a payroll tax holiday. Because what you don't want to do is all of a sudden come January through April, have to make up now this payroll tax that you didn't have being withheld these few months. So I would rather just keep everything the way it is. And that's what I would recommend my employees. Whether or not they elect that, we're going to have a very open and honest conversation tomorrow about this on our team meeting. But actually, I would suggest those of you who are business owners to absolutely consult with your accountant and talk to them, and whoever handles your payroll, maybe you handle your payroll, make sure you have an understanding of how this works, and then have a very open and honest discussion with your employees and share with them. These are sort of the things that I think we need to be really mindful of. In my opinion, this is politics, if you will, right? To get us through having a payroll tax holiday, but it's really not a holiday. It's not like it's going away. It's not like we're not going to have to pay it sooner rather than later. And I would think it's easier to have it just pulled out normally than have to worry about in 4 months from now having to make double payments. Eek, very stressful. Okay, that's my opinion on that. That's what the payroll tax is. Definitely have those conversations, look into this situation and be really honest with your employees and just talk to them about it. I'm guessing, because I know my employees pretty well, I'm guessing they're going to agree that it's better just to have it pulled out on a normal basis than have nothing pulled out and all of a sudden a lot more pulled out come January. I don't know. This just my idea. We'll see. I'll let you know what they say. All right. Next question. Great question. All right. I haven't started saving for my child's education yet. Where do you recommend I start? Okay, great question. Actually, I've been hearing a lot about this. So actually, I think that many of us can relate to this. Sometimes you've started saving, maybe in a checking account, maybe in a savings account, maybe you've done a college savings account. But for many Americans, sometimes you don't really know where to start. And I've actually learned that from my own clients too, because a lot of time my clients will say, well, we invested in some real estate project that we're hoping for the kids for education in the future. And certainly my parents were part of that pool. It didn't work out so well. But that's what their intention was. And I also know a lot of parents will open a savings account or checking accounts at the bank for them. I will say that this is what I would recommend. If you're thinking about saving for your child for college savings, I would actually look at college savings plans. Like they're called 529 college savings plans, because these are accounts designed for this purpose. There's certainly a lot of tax benefits for using a college savings 529 plan. And there's a lot that you can choose from. They're state sponsored. So there's usually one for many, many different states. And you might be in a state that gives you an additional benefit for using that college savings plan within your state. So I would definitely look at that first. And if not, if you're in a state such as California or New York, where there's really not a big benefit to using our own state's plan, you can then take a look at other states and see if there's a plan that makes most sense for you. So, whatever you do, I think we can all agree, especially those of us who have had college loans and college debt, that any bit you can save aside for your child is going to be meaningful and helpful to them. So, do the best that you can and do it consistently. Set up a program, whether it be a checking account, a savings account, college savings plan, whatever you do, have it done automatically. So automatically pulls money from your checking account. So great question. And thank you so much for asking that. Next question. All right. Should I fund my 401k or my IRA? I know I can't have both. Great question, because I like that you're thinking 401k and IRA, but I would ask you, why can't you have both? You absolutely can have both. So if you continue to have income and you're continuing to work, then absolutely you should continue to fund your 401k. And depending on your age and your risk tolerance and your time horizon, you might even look at the Roth 401k if that's an option at work. But I did want to mention this because this is a big thing. In fact, I've even met financial advisors through my 20 plus years as a financial advisor that didn't know this. You can actually have always a 401k as well as an IRA as long as you're working. Now, on your IRA, you may or may not be able to deduct it, and you may or may not qualify for the Roth IRA, but you can always still have an IRA. And actually, I've met some accountants that didn't even know this. So let me share this with you. If you have income from your job and you have a 401k that you're contributing to, you can always also contribute to an IRA. Now, for which one makes most sense to you, I would definitely, once again, take you to Forbes. I have a page on Forbes. If you Google Winnie Son Forbes, you'll see articles. And I do a deep dive on the differences between IRA and a Roth IRA, which is helpful for those of you considering a traditional 401k or a Roth 401k, because tax treatment wise, they're the same as an IRA versus a Roth IRA. So definitely take a moment and check that out when you have a chance, because I think that will be really helpful for you. All right. And thank you so much, Kurt, on my team sharing that for you so you can kind of see that's a new article that talks about the eviction and as well as other articles that we're sharing during this time. Actually, I have a lot more articles coming up very soon, so I'm excited to share those with you. And we'll continue to update that on that as well. All right. I see more questions and comments. So do know we are monitoring that as well. But let's take another question that was submitted earlier. Let's see what we have. All right. Question is, I heard you say on digital trends, well, first of all, thanks so much for watching my digital trends, that it's important to plan for the end of the year. What things, I guess, should I prepare for if I own a small business and haven't saved anything yet for myself? All right, great question. So we are going into the end of the year, right? I mean, it's already September. It's crazy how time has flown by. So at the end of the year, there's a lot of things that you can do and you should do. So if you are self-employed and you haven't saved anything for yourself just yet, I would highly recommend looking into saving a self-employed retirement account. Could be a SEP IRA, could be a one-person 401k. If you haven't set that up, do know you usually need to set, there are some plans that you need to set up before the end of the year. So I'd highly recommend speaking to a financial advisor, such as myself, or an accountant to help you with sort of these strategies in place. Super, super important. In fact, we're doing a lot of these meetings right now. In fact, I have another meeting later this afternoon with a potential client interested in the things that we're talking about, right? So you haven't done this already and you're thinking, well, I own my own business and I think I should set something aside for myself, maybe even your employees. Definitely reach out. You can go to sungroupwp.com, which is our website, submit your information. We'll set up a call probably within the next 2 weeks. So it can be pretty quick. But these are some things that you want to do. In addition, if you own your own business and you haven't saved up anything for yourself yet, again, I would also consider doing that, contributing to an IRA as well. And on the IRA, you do have until your tax filing date. So in 2021, that's probably April 15th. Unless the government extends that tax filing date again, like they did in 2020. So we'll see how that goes. Okay. So really important. So let's take a look at one of the questions that we have had submitted. Let's see what we have here. All right. This is going to be actually, let's take a look. Well, that's okay. Go ahead and pop out that question that you had. All right. So I'm actually, this can be our last question, actually. So that will be, what do you wish you had known about investing and money when you first started about investing? Oh, great question. I should have been asked that a few times in different interviews. So I'm happy to share that with you. You know, when I first started investing, I think it was when I was about 19 years old and I had set up an IRA at the bank because my accountant at the time told me that I should do that because I had a little bit of income from the company that I owned while I was attending UCLA. And I will tell you what I wish I had known about money. First of all, I wish I had certainly invested sooner. So it would have been great if my parents unfortunately didn't have a lot of financial experience and so they didn't know a lot about investing. But I would certainly say if you're thinking of this, start as soon as you're thinking about investing. If you can, make sure all your debt's paid off, you have no debt, and you have a good handle of your budget. At that point, you could consider investing. The other thing I would say is when you're thinking about investing, a lot of times we get really excited about investing in individual stocks. And I think that's good. However, I wouldn't make that your entire investment. Instead, I would take a look at maybe picking a couple, maybe one or two stocks to begin with that you're excited about, because that's easier for you to monitor and you can learn through that experience of investing. And the second thing I would do is think about picking a good, solid, diversified mutual fund or exchange traded fund to sort of balance out. So that's kind of your serious money to kind of help balance those individual stocks, just in case, you want to make sure you have some diversification. The third thing I would say, which I think is super important, is to make a meeting with a financial professional. Now, not all financial professionals are going to be able to help you when you first start. But, take a look at, we have programs such as savingpi.com, which is a great tool for those of you who are first starting to invest. If you have I usually say if you have about $5,000 saved up, then at that point, it's probably a good idea to start thinking about investing. But up until 5,000, you could certainly buy directly, individual securities cheaply. But it usually is good to start at 5,000 for a nice diversified portfolio. So you could totally just, use a savings account or checking account until you get to that $5,000 point, and then you can take a look at sort of reinvesting and rebalancing and really creating a good financial plan for yourself. The other thing I think is really important too is to consider getting a credit card sooner rather than later, and learning from someone who's really responsible with credit cards to help you through that process. So number one, you're building credit history, and also you're learning how to use a credit card properly and a very responsible way, which, as we know, is making sure that you pay your credit cards in full each and every month. That never gets skipped. And I would add that you should also, as you get older and you have income, you have a job, to make sure you have it set up so it's auto pay. So each and every month that credit card bill is paid off, so you never miss a payment. So those are some things, and we'll definitely have more to talk about on further conversations. But thank you so much for submitting those questions, and do know we're seeing a lot of your other questions coming in as well. So we'll continue to add them to the list, and we'll answer more of them come Friday. But tomorrow we have a really great interview, so I'm looking forward to sharing 2 guests with you. So do join us again tomorrow, 1:30 Pacific, 4:30 Eastern. Thank you so much for tuning in, and I'll see you again very soon. Take care now.